to the Fed announcement to figure out what's going on here. S&Ps are rallying nominally though right now on that Fed news, which is there's nothing going on right now. This statement, comparing the statements over here. So let's welcome everybody, get started here. So excellent. Somebody was saying they can't hear us. They can't hear us. What are you doing? What are you doing over here? All right. Just make sure you guys are tuned in. By the way, let us know that you do hear us all right, see us all right, and we will officially get started here. That is important. That's it's good to go. Broadcasting into a couple of different rooms right now too. Awesome. Okay, sounds great. All right. Garrett, you have a large animal behind your head over there, but other
I
than
do,
that, man.
yes. Hey, look, you know what? We get one of these. We get these events every six times a year, and there actually is a pretty significant development in this Fed statement that I'm reading right now. So we're going to break all that down momentarily. I'll walk you through everything that's happening. But greetings, I'm up here in Hunter. Great being with you, Don. We've got a lot going on. We're going to be talking about a trade that we're aiming to accomplish today at 235. But let's kick into it. What are you seeing in terms of price action with the Fed right now?
Yeah, you know what? So I mean, overall, it's pretty muted. So I am and have been, and we'll talk about this a little bit in the next 30 minutes. So I'm kind of a purist. Like I look a lot less at the statement now and much more about price action. And the price action right now is relatively muted. The one aspect I am definitely looking at, though, the bond market's a little bit of a bid back to the bonds. But again, I kind of feel like this time around, it's all about the Fed press conference, Jerome Powell hitting the main stage here in 28 minutes. It's much more the press conference, I think, than this statement here that's going to drive a lot of the price action, which we'll explore here in a moment. So before you go too deep, let me give you everybody a brief introduction because I can already see there's some people like brand new in here. All right. So I'll give a kind of a brief introduction and then we'll jump back to market. So we're doing this like while the Fed is actually coming out. I
Welcome to my
like
life.
it. So today's presentation brought to you by Theo Trade. The Fed strikes back. I'm Don Kaufman, joined by Garrett Baldwin. Risk disclosure: we're not financial advisors nor a broker dealer. And I always throw that up here because I spent a long time in the licensed world. Boy, am I happy to no longer carry any of those or have to have conversations with the SEC and FINRA on a daily basis. If you need to get a hold of us after today, support at theotrade.com. Other than that, a few housekeeping. Look, we're going to go through a lot today. So focus, people. I know that Jerome Powell is speaking, and I'm telling you, when Jerome Powell is speaking in 30 minutes, you'd rather pay attention here than there. He's not going to tell you anything that we're not going to be able to interpret here in kind of real time. And that is one of the coolest things of this afternoon is we're going to be interpreting kind of in real time. And again, I am going to be much more about price action in that market. So Garrett, rather than me, read like a bio. So for many people here at Theo Trade, you're the new guy. You're the new
I
guy.
am.
By the way, we don't even call you like new fish because you've been around the business for a lot of years and you've actually worked with a couple of old, obviously partners and associates of mine for some years. So I'll give you the stage to give the nickel tour on yourself.
Oh, I appreciate that. So yeah, I've been in the financial media world for a long time, broadcast journalist slash investigative journalist in finance for about 15, 20 years. Also, I started trading during the dot-com bubble, got my head kicked in during the dot-com bubble and learned a couple of lessons along the way. Ultimately, after the 2008 financial crisis, I went on about a 16-year academic journey to focus specifically on really behavioral economics and behavioral finance, but picked up a couple of degrees along the way, MBA in finance, studied quantitative methods at Hopkins, found myself studying cross-border capital at Harvard Business School in 2018. And ultimately, where I really focus my attention is really helping investors and traders avoid major downturns. So one of the signals that we have developed and that we've brought here to Theo Trade, which has me really excited, is the ability to really market time, which a lot of people don't believe is possible. But when our signal has gone negative, we avoided the gilt crisis in 2022. We avoided the Silicon Valley crisis in 2023. And our recommendation was to be very, very cautious and move to cash on February 24th of this year. So we largely avoided this downturn. And that's really kind of one of the major things in quantitative methods. It's a lot simpler than I think I might make it out to be, but I was kind of put on a journey to avoid, losing money, which is a little bit different than I think a lot of traders pursue, right? The purpose of the market is to make money, but I'm a firm believer that the purpose of the market is also to sell. And I do my best to identify when there is a significant amount of selling that retail investors get kind of caught in the trap. So I'm really excited to be here because TheoTrade really aligns with the values that I have as a trader, particularly three major things. One, I mean, education is really, really critical to me. Obviously, you could see that in my CV and my resume, the amount of work that I've done. But I really like to teach. I really like to trade. I really like to show people the ropes. Secondly, I mean, it really is about community. You guys have built a really great community of like-minded traders, of like-minded teachers, and you see it in your chat room. You have a lot of people who are excited to be here, excited to trade, asking questions. You're building a community, which is really, really vital. And the third thing is there's a greed element to it, right? We're $123 trillion sloshing around at any given time. There's always a bull market somewhere. So even if you miss the latest Amazon trade, there's always another opportunity out there. And you guys do a great job just identifying different ways to make money in the markets each day. Bull market, bear market, doesn't matter. It's really just about taking advantage of what the markets give you. And you guys definitely see that.
Yeah, by the way, I like this. There's a comment that came in over here. This guy seems super qualified. What's he doing with the misfits over at TheoTrade? He hides it very, very well. Let's put it that way. So here's the connection between Garrett
Yep.
and myself, and I'll give you a little background on this because it's great to be like what actually got you here. Yes, some of us actually have a number of degrees. I think Garrett though takes the cake on that one.
That's the goal.
Jeff Bierman's pretty close. Jeff Bierman is pretty close in that one, but that absolutely kills me. So the link between us is a couple of the individuals over at Tasty Trade.
Mhm.
So obviously Garrett worked with a good friend of mine, Tom Preston, who is also well-degreed individual. The only person I've ever met that did like a master's degree in Latin was Tom Preston
That's
because
right.
he was bored that year. Um, I love that story too. And by the way, I've always said this, like whenever we bring anybody on here at TheoTrade, like I usually can make one phone call and find out their entire life story. It was like a text message to Tom. It's like, oh yeah, like that's how we vet people here. We vet people with like one phone call. Because if you traded at any point in time, like in Chicago, or you knew anybody that traded at that time, everybody knows everybody. It's crazy.
Yes.
Whether you were Chicago Mercantile Exchange, you were SIBO, we even know a lot of the people now for NYSE floors. It really it's a big world that's incredibly small. Like it's like
Mhm.
1 degree of freedom in any direction. So no, I actually appreciate a little bit of the background on that one.
Absolutely.
The
Absolutely. Yeah. I'm glad that I'm not in Chicago anymore, but I mean, half my life was spent there, graduate school, work out there, rode heavily from CME, but hang out in series and don't drink a trade of cactus. I mean, you have those war stories, but I mean, that's what really makes a lot of it worth it because you have the trading hours, you get to know everybody. But then you go out, you get to know people and you trade stories and then ultimately you find yourself just, years later reuniting with people and it's great because this type of environment this didn't exist 10 years ago, so the ability for us to connect anywhere in the world at any given moment, talk the markets, it's exciting, it's a great platform, it's a lot of fun to be here, so thank you.
Yeah, no. By the way, I also haven't thought about cactus in a long time. For those of you that are joining us, have no idea what cactus is. Spent a lot of my 20s in the afternoons at Cactus, and
Yes.
Cactus is a bar, and it's directly across from the Chicago Board Options Exchange. And the waitresses actually wear shirts that say "Don't drink and trade."
Yep.
So, but at lunchtime, like you could go there like 11:30 and everybody was in a trading jacket and drinking already. It was I never left the floor. So like literally I never left for lunch, like I don't think one time ever. So a little about me. I grew up around it. I've been going to the Chicago Board Options Exchange trading floor since before I can remember. Actually, a couple of the people I ended up working with later in life I met when I was like 8 years old. I have no recollection of it. They do. They actually do remember. So I come from a family that traded, and I've told this story maybe a little bit differently, but how I got involved in it is I had an uncle that was a market maker in the early 70s, and he started a firm called O'Connor and Associates. He
Mm.
wasn't an O'Connor, but the O'Connors actually gave him, $300 million, which was a lot of money in the early 1970s. And he saw things in the marketplace. He was a mathematician. He went to school in actually Rensselaer Polytech. So I kind of grew up like knowing about it. Like it was always second, nature. Like people would talk about in the money, out of the money at like Thanksgiving dinner. We spent a lot of time with his family, as kids and so forth. And growing up, like I never had any intention. Okay, I never had an intention of going into the financial market. None. I didn't go to business school. I actually did a degree. I took one business class in my freshman year at college. It was enough from like this is the most boring hour of my entire life. I'll never take another business class in my entire life. I swore by that too. And I did my undergrad in molecular genetics
Mm.
and spent a year and a half in Australia doing an honors degree over there. Came back and I was going to like, I could take the MCAT. I actually kind of wanted to go to vet school. Um, and a cousin of mine is like, hey, we had a clerk that's just not working out. Come. I heard you're off this summer. Come. So I fly out to Chicago, and 3 weeks. I went from like ramen noodles in a dorm room to 3 weeks later, like living in Glencoe in Chicago, and but I was clerking. And then 3 weeks after that, one of the market makers showed up to work late on expiration Friday and still drunk from the night before, and they literally took his jacket right then and there. And that was it. That's where I started trading, and then I met Sosnoff and
Yep.
Sheridan in the pit. In fact, there's a SIBO reunion. This is hysterical here as I throw this up here. The SIBO Chicago Board Options Exchange. There's a reunion this Friday, but it's not in Chicago. It's here in Scottsdale. So I happen to be in Scottsdale right now. I'm broadcasting from Paradise Valley. It's like right down the street from me. So there's more traders that live here now than probably in Chicago. It's this is like the mecca, and that's actually how I ended up here in Arizona too. An uncle's family who retired out here.
Taxes are
Anyway,
certainly better out there anyway. Well, we're seeing right now 2 o'clock. You had that pop. Now you're starting to move a little bit higher. Reaction right now. Again, it's really about what Powell is going to be talking about today. He speaks at 2:30. We're looking for a very specific trade. We'll walk you through that in a second. But the big thing out of this, and he'll talk about this. They're going to be slowing the pace of their security holdings, cutting their redemption cap from 25 billion down to 5 billion. It's not significant, but we're getting closer to the end of the QT cycle. And I think that that's what we're hearing right now. And in a market that really has rotated around stimulus, the big remove language that they took out of this, saying that the risks to inflation and employment are roughly in balance, that is gone from the statement. That's a significant statement to suggest that inflation remains a problem for the Fed. Employment situation, they're going to try to monitor it. I think we're going to be talking about that one big favored word that you love right now, which is volatility.
yeah, I the only way out is pretty much through. We'll throw up the FOMC here. I mean,
Yeah.
like literally when it comes to volatility, is the only way out of this is going to be through. The one aspect in here that I want to mention this before I get into this, and I was talking about
Yeah.
this last week. If there's one thing that so many on the retail side of the business. Now, I've worked in the market making side of the business. I've worked on the brokerage side of the business. Obviously, I'm a retail trader. I've been a retail trader now, effectively, since I've been out of the brokerage business. It's been 2015. I'm 10 years now a retail trader. And the one thing that it just bothers me, like people don't understand, like this volatility is your opportunity. This is where things get less efficient.
Hmm.
And less efficient is a good thing. It's like where opportunities, like if you think of efficiency as like really, really close together, everything's very tight knit, less efficiency, things start to get pulled apart. Okay. And in between those seams, there is money to be made. And
Yeah.
it's one of the aspects I just wanted to bring up before we go too deep into this, because we're going to spend, the next 30, 40 minutes literally, okay, looking at markets, getting a read on markets, kind of passing this back and forth a little bit. This is a pretty unique session for both, I think, Garrett and myself.
Yeah.
Broadcasting live during a Fed announcement, which we've all done. But again, it's kind of one of our first, extended sessions together. And I'm curious, Garrett, like, where you're actually headed versus what I typically look at into one of these Fed announcements. I mean, I can start with the fact that one of the things that I look at extensively outside of just price action. So the S&Ps are
Mhm.
up 45. Let's
Sure.
just state the obvious, right? The S&Ps are up 45 points. And that's the obvious. The not so obvious portion of that. First of all, I kind of think to myself, I'm like, that may not make a difference because we don't. I mean, yes, they changed the statement. We don't really have a great feel for Jerome Powell's statement just yet. But my question, like as soon as I look at the S&Ps and they're up 45, my question is, I always go to the SPX. And the
Yes.
reason I go to it, I want to see what the SPX says about risk for the remainder of the day. Like, and I do this like naturally, incessantly. I'm looking at the SPX because uh, right now we're still pricing in, and this is
Mhm.
significant, $37 more of movement from where we're presently at. So most of the time you think of like options are going to decay the closer you come to expiration. Well, this is an option that expires today, okay? And they're still pricing in ample movement. Like if you were to look at a product like VIX, lots of people look at VIX, and VIX is at 20, but today the VIX is at 55, right?
Mhm.
Things are kind of amped
Yeah. But take a
for
little
Fed
bit of a
meeting.
step back and kind of
Yeah.
explain that in a little bit easier terms because we're bringing up SPX. We know that means the S&P 500 index. We know what the SPY is, but for daily vol, kind of walk us through what that means and why it's so important as we move toward that 2:30 period when Powell will speak.
Yeah. So what to give you some of the details behind this, what I'm actually looking at, even rather than just look at like volatility to, when I say, oh, the volatility is 55%, I think that confuses. I'm looking at option pricing in the S&P, right? And I'm looking at option pricing in the S&P to give myself clarity to what the market is saying about risk.
Mhm.
Option pricing is this mechanism, okay, for pricing forward risk. And a lot of people don't realize that. Like they look at options, they're like, I'm going to take a shot here, I'm going to take a shot here. It's less to me about that. Yes, you can definitely take trades here and you can definitely take trades there. But I'm looking at it right now as a forward indicator because a lot of the indicators that we look at, like a MACD or Fibonacci, they're looking at past price action. I'm looking at this and saying, what is a live market right now? Like, forget about what we think, push it aside. Like,
Mhm.
try to push aside your thinking and say to yourself, what's the marketplace kind of dictating? And you go, so why should I trust that?
Right.
Because if you look at the volume, there's billions going through here every couple of moments. Like, this is the best, if you will, like the line on the game. This is as good as it gets. There's no other, like if you bet on a football game, it's a couple $1 million bet on a football game. This has got billions of dollars going through per minute in terms of the options order flow. And the more skin in the game, okay, the more effective they're going to be at handicapping that forward risk. And I say handicapping forward risk too. I'm like literally, they're saying like, okay, by the close today, by the way, close in here closes
Sure.
15 minutes after, but the close here, by the close today, we're supposed to move like $37. That's helpful. Does it
Yes.
have to move 37? No, but it's really helpful because this money is always going to be smarter, okay, than an individual.
Sure.
And that's I think probably the most complete way that I assess it. And especially during an announcement like this, like I'm looking over here and I can see like I got a million monitors up there,
Right.
but I can see like the S&P futures, like I can see them higher over here. It's
Yep.
great. I'm actually watching bonds and so forth. But to
Well, I mean,
see
let
this,
me
yeah, go
let
ahead.
me let me let me take you through a little bit of a more simplistic view, right?
Okay.
Because what I look for, and I go very macro to micro, right? I start on a 30,000 foot view of what's happening in the system itself, and then I drill down to identify places that are opportunistic in a very short window. So you just said the SPX. There you go. Right now, what we have on the screen is the 1 minute volume weighted average price of the SPX going back to today, right? So every one of these bands that you're seeing is a standard deviation of price. And then you have the second standard deviation, and then you have the third standard deviation. What we have seen time and time again is that every time we get down into the third standard deviation, the algorithms get busy. So what are we looking for? What am I looking for today? Like, what is this pop and drop that we've talked about? Well, just real quick, right? There's no rate cut. We know that. Powell's going to speak. The market will react. And everybody's sitting here saying, well, is Powell going to save our stocks? No, he's not. And here's why. This is the National Financial Conditions Index. This is leverage, credit, risk in the system. And if we go back to COVID, we were in this positive period accommodation or positive period where the number moved into the positive. When it goes into the positive, there's a problem in the economy. When it gets towards zero on this National Financial Conditions Index, there is a problem. And that is typically where the Federal Reserve steps in and provides quantitative easing or some level of additional accommodation to reduce stress in the system. We saw it in COVID when they dropped trillions of dollars in the sky. This circle right here is COVID. You had a big expansion of risk, leverage, everything else after they added $4 trillion from stimulus. Then you had the $2.2 trillion in the CARES Act. Then you had the inflation. You had all of these forms of stimulus. And then we peaked in November 2021. And then we had a problem in 2022 as they tightened. We moved all the way into October of 2022, and they accommodated again. The Treasury Department, the Federal Reserve stopped dumping bonds the same way that they were. They started to get really accommodative in December of 2022 and changed their position. We are in the same level of risk, leverage, and credit that we were all the way back in 2021. So you're going to see, I hate to say it, I think we're going to see valuation compression in the market. Now, that's bad for investors, right? Less stimulus, less
translate that exact term,
yeah.
valuation compression.
Yeah,
that
valuation. That's
such a financial term.
I know.
Yeah, go for it.
And in so many ways, it almost doesn't even matter. But I mean, this goes back. If you go back to 2022, right? So I'm going to stop my share real quick because I just want to pull something up real quick. I'm going to show you the Shiller Index, right? The PE index of the S&P 500. This is what is the average stock trading at in terms of its market valuation, price to earnings. Now, I'm not a big PE guy until I see this chart. So this is the dot-com bubble, right? 44.1 times earnings. This is November 2021 when we were at 38 times earnings. This is 3 weeks ago. And then ultimately October 2024, we're at this peak short term, 38x. Now we're down to 35. What this goes back to is when you are buying a company, you're buying the earnings, right? That's what the PE ratio is. The price to the earnings. How long is it going to take in years for you to generate that return back? Well, what happens in a period of price compression or valuation compression is that, Don, you're going to say, you know what? I don't want to own Tesla at 75 times earnings. And then Professor's going to say, no, I don't want to own it at 70. And I'm going to say, I don't want to own it at 65. And then all of a sudden, it just compresses. And one of the great lessons of this is Home Depot during the dot-com bubble right here. This is a company that went from 55 times earnings down to 16 times earnings in 2 years. And the price went sideways. Nothing really happened. And the CEO had to step down, and he walked away with $2 billion, right? Because he was just a victim of circumstance. So
it's a rough job, but somebody's got to do it, man.
Somebody's got to do that. And again, I am more than willing to take that dive if anybody needs me to step in a struggling company. But the point about this is that when you have that type of compression and you have this risk leaving the system, it leads to more volatility. It leads to, more questions, a lot of concerns, a lot more fear. And that creates a lot of opportunity to trade, which is what we're looking for here at 235. This has kind of been the pattern of the S&P 500 going back up to March 2022. So I'm going to walk you through this real quick, and then Don's going to take control of some things. But we're looking for, we've already seen a pop today on the S&P 500. It's not significant, but if you're trading options in the short term, and here is the SPY, I'm looking for this, and this is the certain conditions that I'm looking for, particularly when the Fed is trading. There's already been a pop in this already, but if Powell says something and this comes down to the second standard deviation band and we get into the third standard deviation of price on the SPY, I'm going to speculate to the upside. I like to follow in the short term over 15 to 20 minute period the price direction of the S&P 500 from 235 to 237, whatever direction it's heading at 237. And if we're down here at 563, I'm going to buy the 563 call that's expiring today, and I'm just going to set a relatively tight stop of 15 to 20%, and I'm going to look and see if that reversion comes. roughly, the first 5 to 10 minutes after Powell speaks. But again, I only make this trade if the conditions are met. And if it doesn't happen today, then great. We've got plenty more live events that we're going to be doing around the Fed, because this has delivered time and time again. If this is the 1 in 4 situation where it doesn't arrive, it'll likely come again when the Fed meets April. And then we have the June meeting, which is going to be quite a doozy as well.
Yep. So every trade I'm doing is predominantly based on quantitative methodology, exactly
Mhm.
like that. Where if it doesn't necessarily set up, like I know that like sometimes you're like you're live, you got to do something
Right.
in
You
here.
got to do
But if it
something.
doesn't set up, right? So I actually took a shot at a trade a little earlier today, which I am going to discuss over here for just a moment. One of the trades I actually took a shot at earlier today is I just bought a call in the TLT that
Hmm.
expires on Friday. And what I was looking for is I'm going to make this as straightforward as possible as I explain it. More accommodative, like accommodation in terms of policy. I'm looking for statements exactly like the one that we got out of Powell, and that is, hey, look, we're right now the quantitative tightening, which is QT, okay, is going to ultimately diminish, and they're getting ready basically to juice the cow over here again, which is that's Jerome Powell's favorite thing to do is just go out there and just be like, it's money. I mean, nobody was quite like Ben Bernanke, but those were unusual circumstances.
Sure.
Nevertheless, all I did was I bought a TLT call, and I bought a call that was just very, very slightly in the money. And I did that because I didn't want too much extrinsic, which is what we term time value in the trade. And it could not be any more straightforward. So, what if we're wrong? Well, I love to discuss in trades like this. And I know Jerome Powell's coming up in a few moments, but I love to discuss in trades like this risk reward.
Hmm.
It's all about, what that risk reward is. And in this circumstance, I ultimately paid in here, and you can see this is one of the trades I did, but I paid 77 cents for a trade. And paying 77 cents for the trade, okay, I'll look and say, well, this product, which is TLT, can move quite substantially. And even if I'm wrong, the most I can possibly lose, in this case, I wouldn't even set a stop order. Most I can possibly lose between today and Friday, 77 cents. I'll
Right.
walk away from that all day long. If I'm right, he says something kind of crazy, literally eases up, because I always call Powell double dove down Powell. For those of you that don't know, that stance, dovish, basically means he's like, here's the money, just take it. Okay. If he goes double dove down, which I think he probably will, the bonds may rally, interest rates may come down a little bit, and this thing could really pop. So I like risk reward. Like I don't trade because I see something necessarily right here in the chart. Because I don't see anything in the chart. I can't possibly see anything in the chart.
Mhm.
This is going to be a big binary decision. But I do think that Powell, okay, he doesn't often disappoint, and he can be accommodative. Now, with that being said, that stance, we're like, hey, we're going to start to lower rates again a couple times this year, and instead of quantitative tightening, there could even be quantitative easing coming around. With all of that being said, okay, the hard thing right now for me is the S&P 500.
Mhm.
Like the bonds have like some clarity, right? If the interest rates are going to start to finally back off, but the wild aspect, and where I really like your trade in here is I think we're going to get whipsawed around a lot in the S&Ps, because if you have the Fed basically saying like, look, we're going to have to take a stance where like this economy is possibly slowing down. I think he's actually going to say that too. I think he's literally going to say during his press conference that we're seeing some economic slowdown, and they're going to have to accommodate just that. Jobs, they're obviously going to mention that, a little bit of a slowdown. If he says that, let me ask you something: is it good or bad for the marketplace? Is the marketplace going to cheer and be like, "Yeah, lower interest rates, let's rally"?
Right.
Or they're going to cheer and go, "Wait a second, that's not good. This is going to hurt a little bit."
Well, I
And
mean,
that's the
we've seen
indecisive.
this happen a couple of times, and it happened in March of 2022, where you had that dramatic sell-off coming off that November 2021 top. And what transpired after that, which is really, really important, is that out of nowhere, this market just took off. It absolutely rips from the Fed meeting into April of that year. And I can pull that chart up real quick because it's a really
Go for it.
good it's a really good reminder because now, no matter how long you trade and no matter how many times you do this, what we end up doing is we end up cursing ourselves because we'll say, all right, well, I'm going to be short in this position, but the price action will just go against you. So you have to keep your head on the swivel at all times. This was the beginning of 2022. In our signal that we used, we went negative on January 3rd. We sold off into the bottom in January 28th. We had a short pop. We had a drop. The March meeting came. This is the March meeting right here. We were back within like 5 to 6% of all-time highs again. And it legitimately doesn't make sense, right? But again, it's a reminder that the economy is not the market and the market is not the economy. This is why you got to follow price. This is why you got to follow indicators. This is why, when there's no buying pressure at all in the market, which is what we measure, sometimes squeeze happens. And then what happened? The market popped, and then in April, the funds turned right back around and used it to sell, sold off into May, had a short-term pop, and then we had the largest hedge fund sell-off in 15 years the second week of June. Markets don't go straight down. So if you're bearish, you got to make sure that you are paying attention to where you are at any given moment. Use the volatility to your advantage and recognize that sometimes the market will go against you in a way that you did not anticipate. I got beaten up a little bit in 2022, despite all the knowledge that I thought that I had. And then I changed my perspective a little bit, which is why I hold the view that I have around specific indicators and why I always go back to this kind of idea that like sometimes you become so bearish that you become bullish. That happened to me last Thursday. I rode this out into today. I started to exit some positions yesterday before we went up to Cooperstown with my daughter. I took some gains, and now I'm in the wait and see mode right now. And we'll see what the price action looks like right now. I would love to see this market rally. I would love to see us back within all-time highs, because it's going to tell me that in about 3 to 4 weeks we're going to have another one of those sell-off opportunities, and I'm going to be ready for it, especially if volatility is low, because I want to buy puts when the VIX is at 16, not 25.
Yeah, so this is the point in time where, of course, Jerome Powell hits the main stage, does a little dance, makes a little love,
And we're
gets down
ripping, right?
tonight.
We're
Yeah,
already
no,
ripping, right?
but in all seriousness, I have, as I was saying to you earlier,
A little early.
I am much less now about what he is saying, and I'm much more like, by the time my brain power can actually focus on anything that he's actually saying, it's past tense. By the way, for those of you that actually sit at home and you think to yourself like, I'm going to trade on what he's saying, by the time you actually hear it, you're about 6 to 8 seconds delayed.
Mm-hmm.
Whereas trading firms literally are plugged directly into the microphone that is at. I mean, jump trading has got billionths of a second off of his actual voice. So that's I mean, it's not reasonable. So what I'm looking at though is changes in volatility. Like, what are the statements, whatever statements he's making right now? I can read that later, and I will. I'll go through some of it later. I'm kind of curious, maybe what he says, but it's to me, it's much more about price action. As I said, the years of being more like quantitative, I'm more like the purest of the pure. Like I want to look at like what the bond market is implying, for right here, right now, on whatever statements are being made. And I'll look at whatever he's saying, like again, and kind of in past tense, because in the end, what are you in this business for? Are you in the business
Mm-hmm.
to actually try to interpret Jerome Powell, interpretive dance, or are you in this business to actually make some money from some of the
Yep.
price action in there? And people lose that. They
Mm-hmm.
lose it. It's like the financial media. You just completely lose your mind in that. And that's just, yeah, it's not what it's not what it's about. Speaking of what it's about over here, so we now have the FOMC, okay, and this is a FedWatch tool, and in the FedWatch tool, obviously this is probabilities, and I'll refresh this. This is probabilities for March. Nothing. If you start looking out to May, they're already pricing in right now about a 20% chance of a cut, a 20% chance of a cut into the May time frame here. You go out in June, okay? June is the first time that the idea of a cut in interest rates is alive
Hmm.
And there's over, let's call it like a 1% chance of a cut now in the June timeframe, which is still fairly tentative at best. This is, I mean, being out to the June 18th timeframe is still very much in up in the air, very much in flux. And by the way, I just realized I'm not actually showing my screen over here, so I am going to actually show this directly
There you
on
go.
the screen. Yeah, sorry about that.
That's okay.
As yeah, so here is your June contract. Now, people have never looked at this. This is the Chicago Mercantile Exchange, the Fed Watch tool. It's probability, like plain and simple. But those probabilities are based on a live market. So what this site does, and it's great because it's Chicago Mercantile Exchange, right? It's the exchange converting the futures contract. Like there's a June futures contract that trades Fed futures, and it literally takes the trade and converts it to probability. Before this tool was like alive and well, we would sit there and you can look at the Fed fund futures and you're kind of calculating in your head, like, oh, what's going on? But this probability, just in the last couple of seconds, is going higher.
Hmm.
The probability of a cut in June just jumped. Okay. Because I was just telling you a moment ago, well, it's just north of, 60%. Now that's full 63. And as you actually hit, and this one you do have to hit refresh. Okay. These probabilities start to move. This market is clearly in motion right now, which you can see in the bonds as well. Okay. The
Yeah.
question mark is going to come right here, right now. Okay. Is that is what's good for interest rates? Is that good for the economy? Is it going to translate to S&P 500 rallying back? Okay, just because we have lower interest rates and they're going to lower interest rates by like a quarter point. The coming days, okay, are going to be fairly instrumental, wild, if you will, on that front. I do believe that some of the statements that you were mentioning earlier only points to one outcome, and that outcome is more volatility.
Yep.
That may not be what people want to hear, but again, everything that Powell, okay, is doing right now, it's a huge like catch 22, where you're saying like again, on one hand, like look, we're going to soften our stance. The moment you soften your stance, it implies a weaker economy. And again, I'm much more, quantitative. I'm usually looking
Yep.
at the screen, but
And
those ideas are going to destabilize the S&Ps.
and not just, I mean, the possibility of a rate cut in July. I mean, December already pricing in the possibility, and it's a very small possibility, but you're talking 150 basis point cut down to 275 to 3. And then you go out to next year, and we're already seeing in December of 2026 2%. I mean, that is an extraordinary decline from where we are right now
Yeah.
with all the concerns about inflation. That would effectively be suggesting that we will have tamed inflation because of the state of the economy here in the US. So
Right.
relatively bearish. And right now, moving 237, 239. And what I'm looking for as we head into that 3 o'clock hour, that's kind of where the institutions have stepped in and then they start to sell. So we saw this pop happen at 2 o'clock today, not happening at 2:35. But once again, remember the purpose of the market is to sell, and institutions are going to use big pops in prices during Powell's speech to turn back around and take gains as they come. So,
I'm going to tell you
John,
right off the
yeah,
bat what I like in here too. Did you want to trade right
no,
now? Okay,
No, no,
because
no, no,
one of the
no.
things, yeah.
We're gonna hold off on this. I'm gonna wait until about 3 o'clock because, again, we're in the top third standard deviation band right now. A price on the S&P 500 on the SPY, it's not setting up right now. It had happened at 2, so we're just gonna wait this process out and we're gonna look on the backside and see if there's an opportunity at around 3:30.
So the types of trades that I look for, outside of just a discussion here on the Fed, the types of trades that I look for in the midst of some heavier volatility are very often, first of all, I use a lot of in-out spreads.
Mm,
And in-out spreads is, one strike in the money, one strike out of the money. Look, the bottom line is the trade that I use mitigates a lot of the exposure that people suffer in and around options. When people trade options, one of the mistakes they often make is, they'll go out there, just buy a call, buy a put. I
right.
did that very, very short term. And I think you can do that very short term, very effectively short term. But there's times when markets are getting wild out there. You just do not want to be the individual that steps out in front of a freight train.
Mhm.
And that's what you're doing. So when a trade like this, and when I'm saying this, I'm literally going to show you like a nice setup here. I actually took a position in Goldman Sachs around this, but this is a wild and woolly sell-off inside of the financials. All right. So what you've actually got here is a big breach of what the
Mhm.
options marketplace expected. Then in the next week, a big breach. So this is literally a week, this is a week. In 2 consecutive weeks, we actually saw this precipitous sell-off. And some people are like, oh, it's oversold. Okay. So then you get this rip back. That kind of action, the price action that almost looks like a check mark, that is the hallmark of heavier volatility. In fact, the rip back to the upside, which is, we often call like the quintessential rip your face off rally.
Mhm.
I am sorry to be so non-eloquent with that, but it's what it's called, like
Yeah.
the big rip to the upside. I often fade that move, and fade the move simply means we hit right there. We're hitting today, right now, the upper edge of an expected move. And what that says is, for the most part, like the cycle has completed. It's big sell side activity. It's the
Mhm.
rip to the upside. It's as good as place as any to enter into a short position, and we restart the cycle. And you can actually see this not only on like a daily chart, but during the midst of big sell side activity recently. We head down, we bounce, we head down, we bounce. Everything is not linear. When you're
Mhm.
on the buy side, and when you guys see stuff like, all of the last couple of years, and you watched NVIDIA the last few years, it's just, straight up, like the little mountain climber, like in Price is Right, it's right up. Uh, Sell side activity is completely different. The dynamics of sell side activity are very, very violent. They're, downside activity, okay, followed by huge rips, followed by downside. And that is, okay, that's dynamic hedging kind of 101. And you're seeing right now some pretty good opportunities start to align. Specifically, I see it in some of the financials. Now, I already stepped in to a trade specific to Goldman Sachs. Goldman Sachs kind of did exactly what I'm looking for. Goldman Sachs, huge sell off.
Mhm.
Okay. The big rip back to the upside. I mean, it literally hit here on Monday. So I'm in. Okay.
Yep.
I'm already in. And today, it's up, but it's kind of stagnating a little bit versus the S&Ps, which is good. Okay. We're right on the edge of the possibility of the financials rolling back over. And it's one of these setups that I just use like time and time again, like uh, again, clockwork in the midst of volatility. And I've just done it. When I say time and time again, cruise over to my PowerPoint here for a second. Okay, as I kind of rip through trades, those are SPX ones, but
Mhm.
almost all of these trades in here, okay, like XLV and okay,
And the
all of
XLV
these.
again is the
Oh, XLV, healthcare.
healthcare.
Healthcare, yeah, healthcare ETF. But as I start to cruise through here, I'm just giving people a quick glance at this. Like the setup inside of Tesla is the exact opposite. Tesla, I actually caught to the upside, the most controversial underlying to possibly discuss. Okay. People are like, how did you catch a bottom inside of Tesla? Nobody had that. I didn't have anything. All I did is stepped in the way of a freight train going to the downside with $1.16 at risk. It's $116, to return 167. Now, another one I did, this one actually exited today. By the way, the Tesla one was last week. All I'm doing is using in similar context, okay, setup after setup after setup in and around these expectations of movement. This one in ExxonMobil, I just got out of that literally today. So I go back to the well and I do the
Mhm.
same thing again and again and again. There's gold. I know that everybody's looking at gold right now. By the way, gold. We should go look at that. That's a wild marketplace these days, right?
And by the way,
So
we're now up to 56.80. I'm going to sit here and just call what that period is it's that 5,700 level where we were. That's kind of been the rollover point. There's a lot of resistance at that level right now. So I think you are sitting, and from a macro perspective, I think you're right. You're setting up for the April period where there's going to be a lot of money drained from the money markets. That's a key source of liquidity. People got to pay their taxes, and we are already seeing some pressure on the regional banks. That's probably going to heat up in May and June. So I'm right there with you, looking for this to continue to roll over. It's just you're gonna have these bull traps every now and then, and it's very easy to get sucked into those.
Yeah. By the way, look at what you have in gold right now, because I was just thinking of this setup as I brought it up there. This is one, two, three consecutive weeks
Mm-hmm.
where the gold market at the week end in two consecutive weeks, it's actually exceeded what the options marketplace had expected. So you have to realize like there's billions of dollars at risk. Okay.
Mm-hmm.
And the markets are doing something that's completely unruly. You know, people talk about all the time, oh, this is an unfounded move. Well, now you have three consecutive weeks where you're outside of what the options market expected. It's like an unruly marketplace. So in something like gold, I think you need to expect a wicked, maybe a vicious pullback here in the very near term. I mean, you're on the clock, in my opinion, right now for gold. And if you're not comfortable with, gold, the futures contract, pull up like GLD. Okay. In GLD, again, just as unruly, okay, and looking for like a short position to set up in here. And again, in the very near term, for those of you that are not comfortable even in that product, because
Mm-hmm.
again, everybody gets intimidated. The $280 product, pull up like SLV, which is now over the $30 region. Speaking of SLV, I think this PowerPoint. I'm gonna
I
look
mean,
back over here.
40% move in gold in a year. You're telling me there's not something up, right?
I definitely hit the silver trade. Yeah,
There
here
you
it is.
go.
I hit the silver trade with a single option, which I don't often do. Like I don't
Mm-hmm.
usually just buy a call. In this case, I did simply because there was not a lot of volatility per se in silver. And the upside opportunity, I was looking for silver just to break 30. And as soon as it hit 30, I'm out of the contest.
Right.
Um, it's the 55% return. But again, every one of these trades is effectively built on the same same premise, the same setup, if you will. If you're taking a look at silver right now, it's already stalling. And the reason I was bringing this up is because between the silver and gold trade, there are huge differentiations between the both silver and gold. Like metal, not all metal is created equal at this point, but silver is already to some extent fading on this one. Which for those of you inside of gold, be careful here. This
Yep.
might be a great short entry position on gold, looking for a very brief, but kind of fleeting pullback in here.
If
And
if
looking at
gold
like
if gold is
GLD,
on the cover of Barron's this weekend, then yeah, I think you're going to be 100% right that it is time to go the opposite direction.
it's awesome that you say that. Every time, so when I was like early think or swim, every time like we would get like a huge like cover page like
Hmm.
mention in there, something went horrifically wrong, like in the business. It was, and I'm serious about it.
Yeah,
That
it's wild.
thing, it's like the curse of the Bambino,
Yep.
to be on the cover of like Barron's.
Yep.
And we hit the cover a couple of times, and we actually took, it was like third year in a row, took like the best brokerage, like when we were in the world. We like the third year that was like coming
Yep.
into the financial crisis. I was
Yep.
like, oh man, okay, I
Yep.
could have been somebody. And then they got on the cover of Barron's. You're not somebody on the cover of Barron's. Okay, you're the worst of anybody on the cover of Barron's. It really is. It's the curse of the Bambino on there. So the trade in here. So somebody was just saying, what's the trade setup? The irony is you don't focus. Okay, the setup is it's completely like exploding to the upside. The trade, okay, that you're going to use, like you're not talking about a trade setup. Setup is when I'm usually looking at the charts, like what am I actually doing over here? Okay, the trade itself, like to put it into context, right? This is where, and again, I look at a few things before I ever execute into a marketplace. But this is where, especially if you're like newer to this, you can go out and just do a
Mhm.
little like $2 wide spread in here for some 93 cents. Okay. How beaten up can you get? You're 29 days out. Even though I'm looking at the very short term, okay, fire at will. Like again, I never am going to have a problem placing a trade where, and again, I'm going to feel this market out to see where exactly where I can get filled. So I'm filled. Yeah. Create a duplicate order. I'm going to work this one at 90 cents. Okay. All I'm doing is taking just a little short term bias or a pullback inside of gold. And I've traded a lot today. Traded a lot
You got
today.
to be busy on days like this. I mean,
You
you get these big headlines that you get distracted. It's easy for people to get distracted by happening with the Fed. Obviously, it's easy to get distracted by what's happening with Tesla. But then, if you start paying attention to, again, you go back to you follow the same setup, you follow the same trade pattern, then you just keep going back to the well while nobody's paying attention. That's how you make money.
Yeah. So I uh I stress to you when you are looking at this now, like let's just talk, in context about the trade I
Mm-hmm.
just put on. By the way, I've whatever like 13 fills today. That's just in this account. By the way, there are many accounts. There are many accounts over here. I'm looking at a couple other positions, but when you're setting this trade up here, okay, the most I can lose in here is 93 cents. You do a one lot, Captain one lot rise again. You do a one lot, you got 93 bucks at risk. Can gold pull back in the next 29 days? Okay. Moreover, I just stepped in front of a freight train. You're going to do that. You do that with defined risk. Yeah, I don't want to use a stop order because if I use a stop order, and by the way, I'm not opposed to stop orders. I think stop orders have their place in the shorter duration stuff. They absolutely have their place. But in this case, I don't want to use a stop order. I want to
Right.
step in the way of the freight train because I know for a fact I'm not going to time it perfectly. I'm going to be wrong. This thing could shoot up here and then pull back.
Mm-hmm.
But I'll tell you what, in the next 29 days, sure as hell, I'm going to find out. I'm going to find out. And I love doing stuff like that. Like, oh, what's the edge in the trade? The edge in the trade is if I'm wrong, okay,
Right.
I don't get stopped out. And I'm giving myself time to be right. And
Mm-hmm.
it's often what is missed, like overlooked, if you will, in so many of these trading strategies. Okay, give yourself the ability to be wrong. Give
Right.
yourself the ability to take a little bit of a beating. I think there's another trade I was talking about just a moment ago, and that was the one that I actually closed today. It was an Exxon Mobil.
Mm.
I want you guys to see the structure of the trade, and the reason I want you to see the structure of the trade. So 97 bucks invested. I got back 153, right? So it's the 58% return. But it's not about that. It's about the fact that you realize that like almost every day of this trade, I was basically wrong until, the last like 3 days and still
Right.
came out with a 58% return. And that's what quantitative trading is more about.
Mm-hmm.
Okay. I'm not going to tell you that my timing is going to be perfect. Nobody's timing. How good's your timing going to be when Jerome Powell is up there, getting beaten up by Steve Leisman? I'm not even watching it right now. I swear to you, it's on nothing. But I guarantee you, Steve Leisman, first of all, is the oldest and only adult in the entire room. Because everybody else that asks the questions, by the way, that's why one of the reasons I don't listen to the Fed anymore is because they put people on camera. I'm like, that looks like younger than my child, that's asking a question to the Fed. Steve Leisman is the only adult in the entire room, and I'm not even picking on CNBC. I'm dead serious with that one. They ask questions, so forth. Like I'm stepping in the way of freight train, and I
Yeah.
know that in gold,
Yeah.
and yet it's okay. It's okay to do that.
And
Um,
and the thing about Exxon though that was really is cool is that when I was talking about it this morning on the morning show and I talked about it yesterday, energy prices started to make breakout moves. We saw the same with FCX earlier this week as well. I mean, when that comes and you are well positioned and you are willing to take the right risk and you get risk reward and you get that type of move, the market, because you don't have control over what the market's necessarily going to do, but if you're set up and that money starts to flow in the way that it did into the XLE in the last couple of trading sessions, XOM's the big player there in the energy sector. Great breakout move, great position, great trade. Take the win, move on to the next trade.
yeah, that's it. And that's exactly how you have to do this is just stick and move, stick and move. And
Mm-hmm.
here's a trade where I put it on the 19th, like literally a month ago. Okay. to the to almost the hour in here. I put it on over here with the notion right here is where I put the trade on. My trade was bullish with the
Hmm.
notion it was eventually going to break out. Okay. Every single day that that trade has been on, it's come right up here to like,
Hmm.
oh, it broke down massively. Okay. People were like, oh, you know, the heart drops to the stomach. Oh, it's all over. It's all over. Right until you got out profitably. Okay. It's the trade. It's less about the ability. Like I'm pretty
Right.
good at trying to set up good trades, right? And I'm using every tool at my disposal to set up good trades. But in the end, it's the trade, it's the structure, okay? It's how you actually execute. When I say
Hmm.
execute, like when you send out those trades, okay, are you getting good prices? Okay. By the way, do you see that? That one was working there for about 5 minutes. I'll tell you a lot of things. Okay. I will put on plenty of losing trades, but I will never put on a bad trade. And people don't understand that statement. I will never overpay for a trade. Like I will get that thing down to the penny, people. I filled at 91, 93, 91, create a duplicate order. Okay. I'm even going to work one at 90. Work it. Okay. And by the way, I like to work them this way. Work them one lot, one lot, one lot, one lot. Okay. Lead them out to the marketplace, torture
Yep.
them. Because I'm just getting better incremental pricing as I'm effectively doing that. And you can see gold. One thing I haven't looked at is like, what's the gold chart look like? Okay. I don't know. It looks like a chart. Um, it does. It's again, I like this because by the way, I didn't show up today by any stretch of the imagination. I didn't show up like thinking, oh, I'm going to place a couple of trades over here. But the interesting thing is, and I was on Charles Schwab TV earlier today, and they were asking, "What do you think about the market?" I said, "I have a pretty good feel for bond market. I think the bond market's actually going to go higher." Okay, so I took that position earlier in the day that the bond market was going to go higher. How is my TLT position doing right now? My TLT position is up 50%. Okay, I'm going to be honest with you. I hope my guys are watching right now. Okay, I'm gonna smoke out of that position. It's not 50%, and it's up 50% in a couple of hours, right? So I'm probably gonna bail out of that because you should be nervous here.
Yep.
Hour left to play in the period, should definitely be nervous. So okay, I'm going to take the 50% gain and this one. And again, always get eyes on a marketplace before you're actually going to execute against it. I'm going to come in here.
56.90.
Yeah. So
56.90. We're still running.
yep.
Energy's now moving into positive breakout territory for me, which is great for the XOM, great for the energy trade. Materials continue to do well in this situation. And again, we're looking at that 57 level. And then again, purpose of the market to sell, looking at that last hour. And we're at a VIX under 20 right now.
Yep. I I'm out. Okay. I just whacked an entire position while live on here.
Unbelievable.
So 50% just based on the Fed. And this was supposed to be a short term over there. Okay. Um, so I'm already typing to them. I'm out. I'm out of the
You're out.
contest. Yeah. And if you're kind of curious as to the getting out side of that one, we're already approaching its expected move to on the
Hmm.
week. I'm more than comfortable though taking 50%. If you look at the entry and exit of the positions, the entry of the position. By the way, I know I've got a lot of order like in here, and I can open up my whole order book. But the entry of my TLT positions, okay, were effectively again earlier this morning. Okay, those positions, and here's actually the TLT position. Apologize. That was at 10:05, and again, this is Pacific time. I'm in at 10:05. I'm out by basically noon. So 2 hours, 50%. Okay, I was just taking a nice, quick swing at this. My concern at this point is exactly what Garrett was talking about to start with. And like, you could get a wicked Fed reversal.
Hmm.
We've had a nice move to the upside. So as I was saying, I was on Charles Schwab TV and I was talking about, the bonds rallying and talking about, the financials and possibility the financials were probably going to pick up a little bit and, maybe have some sell side activity. And I was even talking a little bit about gold, but she tried to corner me too. And she's like, so what do you think about the S&Ps? And I go, I don't want to touch that. Like, I don't have the feel for the S&Ps right now because
Right.
I know these S&Ps are going to whip. They're going to whipsaw. And I'm not even sure, Garrett, they're going to hold up into today's close. Like the
Hmm.
rally right now is, and I like to look at S&Ps, the rally right now, and this is a contract roll. So we're going to come in
Yep.
here and we're going to do what's called adjust for contract changes. Hit apply, hit OK. What that does is it makes it look like a continuous contract. Okay.
Now explain what that means.
Yeah. Yeah. So when you're looking at the S&P futures,
Hmm.
the S&P futures, there's different contracts. There's March and there's June.
Hmm.
Well, we just rolled out of March to June, and most people didn't realize over the weekend, right?
Right.
So between the March and June contract, there's 50 points. So if you don't adjust your chart, and you're using MACDs and Fibonacci's and Bollinger Bands, your chart basically is wrong by 50 points. If you're on Tasty Trade, they automatically contract adjust. But on Thinkorswim, it doesn't automatically. Okay. Uh, yeah, send that out. Yeah.
Well, it is one of those
Makes it.
days where you look at, the situation. That squeeze that we were talking about came exactly at 2 o'clock when the meeting dropped. We've gone from 563.29 on the SPY up to 569. So when we do this again live, we will obviously look for that move on that lower deviation band, which we saw, and it took off. It didn't happen at 235. It happened at 230 today, and we still have another hour of trading, and volatility is declining right now, but we're anticipating that we will eventually see that roll over and we will see that climb back into higher volatility. So kind of take us through what you're expecting now as we move into March and April.
I'm just sending out a trade right now.
No, you're good.
March and April.
Yep.
Um, Everything I see right now, as I was saying earlier,
Yep.
has to do with volatility.
Yep.
One of the aspects that really kind of resonates with me is that there's an assumption, okay, in markets right now that the pullback, okay, is not only like the short-term pullback, okay, this happened to actually be a 10% pullback, right, which is fine, as you know, whatever, it kind of checks off that mark. It's a correction in there, but the bid back, okay, could be fierce. The bid back could actually take us in the S&Ps easily, and I'm gonna cruise over because I feel a little bit more comfortable looking at the S&Ps.
Hmm.
Okay, but this bid back in the most current contract, I think you can get all the way up here to somewhere around 58, like 50-ish.
Hmm.
Okay, in that neighborhood there. Look, 90 cents still on gold. I think that the rally is going to be fierce, just fierce enough that people actually start to sound the all clear. Volatility
Right.
drops, okay, and all of a sudden, you're going to have some exogenous event, whether it's going to be tariffs, it doesn't matter. It's going to be a ridiculous exogenous event. Every event that's happening right now, just light the fuse, just light the fuse, and we come back off again.
Yep.
But it may not even last that long. There is I even saw in the last rally, okay, which was obviously earlier this week. Okay, one of the things I saw in the rally really limited volume on the upside. It was
Hmm.
really light on Monday. I'll be curious to see today's, and then the volume I'm looking at. It's not just the S&P volume. I'm looking like the option volume, and even yesterday's sell side activity was light. A lot of positioning prior to the Fed.
Relative
Nevertheless,
volume,
okay,
relative volume right now on the SPY, 60.65.
wow,
Yeah.
light,
Doesn't take much.
light and fluffy.
Doesn't
So
take much.
this is what the marketplace is expecting this week. Like that's what it's expecting this week in terms of price action. This is where the week started. Here's where we're currently at. So even though we're seeing this, what feels it's a rip and move, it's this, it's that. Okay, people, we're nowhere near home. Home is,
Hmm.
that's a big move. Okay. It's a big move to get all the way to the upper edge of what is termed the expected move. And lately, week in, week out, we've been riding the upper and or lower edges of the expected move. And again, all the trades, okay, that I'm doing, okay, are in and around some type, okay, of expected move. And I was kind of scrolling back because the SPX. This is one that I've been sending out kind of week in and week out. These are huge return trades based exactly on these expected moves. So this week, okay, I'm taking my shot and I'm telling people I already have, okay, a put fly right here. If we come down to 5,500 in the SPX this week, and you're like, there's no way that's going to happen. Heard that one before because I heard that a couple of weeks ago, right up until the point, we made an 800% return. Okay. Again, a few weeks before that, right? And it just goes and goes and goes. Here's one of the more recent ones, okay, for 192%. But look, I put two monkeys in here. I forgot about this. I totally forgot
There
to
we
put this
are.
slide together. Okay, that's us, by the way. That's us. This is what volatility trading is. Take some shots like SPX butterflies. Okay, come in here, use some in-out spreads. Again, all the stuff I threw in this slide deck here, it's all really recent stuff, like stuff that's closing in March. Okay, I think the GLD trade is the oldest one. By the way, as soon as I saw the GLD trade, I was like, I got to go trade that right now.
Right. Now
The silver trade,
some of
yeah,
these trades are basically just single call into, level one, level two. Some you will require a little bit more
yep,
clearance in order to make those trades. But the point is that, the trades that you're putting on and that you're sending out, depend on virtually anyone's going to be able to get an opportunity to take part in that action.
yeah, no, that's absolutely why I'm doing some of the trades. And I like to use spreads, but there's a few products, honestly, like silver, VIX is another one. Okay,
Mm-hmm.
I like to use just single option trades, and I'm fully intact. Like they're just the volatility in VIX is extreme. Okay, but the shots you're taking, when VIX is down at like a $13 or $14 product, it's very, very minimal risk. Tesla's one where I want to step in. I want to use a spread, and you
Mm-hmm.
almost have to because the volatility is so high. Like you don't want to, make that mistake and overextend yourself into heavy volatility. Here's ExxonMobil, as I was saying, also using a spread. And ExxonMobil, again, I love to use this example not only because it closed today. Like I push that aside. And again, I just closed the TLT one for a 50% gain while live over here. It's not just because it closed today. It's because I was wrong. Okay, in literally the trade's on for a month and you're wrong for 25 days out of the month and you still pull out a 58% return, and that's kind of what I'm looking for. So I've shown again a wide array of explosive trades. What we actually do here at Theo Trade is we also provide 3 trades a week. This week, for those of you, okay, they're on board here with Theo Trade, you've gotten a lot more than 3 trades this week. I've already lost count of how many trades I do, but I literally have lost count this week. I know it's only Wednesday, but I've been firing this week. But we send out at minimum 3 trades a week. And some of them are very, very basic level one. Some of them are spreads. Some of them are that butterfly that we saw inside of the SPX. Okay. And you can take the information that we displayed today, put it to good use. You could, we give people the expected move indicators, use that to good use. But if you guys like, obviously, some of the trades that you see, we're still working more trades in there. Build another one. But if you like what you're seeing on the screen, if you like, myself, Garrett, okay, Brandon, Jeff Bierman, Blake, okay, I can go on and on. Tony Rago, Corey Rosenblum. We have a very special offer for you. So it's Total Theo Unlimited. And what Total Theo Unlimited is, all in one trading education platform. Everything from sending out 3 trades a week to hundreds of master classes. Okay. And again, it's become the all-in-one trading application. And I like kind of present this, okay, as one package. I actually love presenting it like this because there's nothing you're going to need above and beyond. Like, look, Total Theo Unlimited, this is the annual, and this is everything you get. We have a class coming up this Friday. I'm actually doing the class, and the class relates all around volatility. I've been working for the past 2 weeks on the PowerPoint for it. And the assumption moving forward is we're going to see a lot more volatility. There is a lack of comprehensive understanding, okay, of what that really means. Okay. And when people are talking about volatility and, it's not a natural thing for them to actually see that. We're going to explain in incredible depth what okay, that actually means in context for your trading, okay, and how you can be a lot more effective in the midst of considerably more volatile markets. So that's this Friday, March 21st, 10 a.m. Eastern Time. Everybody, okay, that's in Theo Trade, total Theo Unlimited. Everybody that's in it gets access not only to the live class that's 10 a.m. Eastern Time, but they'll also have access to the archive. Okay, and we archive everything, and you can even like watch it on your mobile device. Then you get 3 trades a week. 3 trades a week, just that. We send out 3 trades a week, different levels and so forth. This week, we're firing. Okay, I mean, we're firing out all kinds of trades, and we've fired out a lot of closes. I mean, honestly, I have very limited inventory kind of left on right now. Like literally, I'm limited to what I have on because I've ripped so many different trades off, and I'm actually looking at another big profit actually on another trade. So I've ripped so many trades off over here. By the way, that's a good thing. Closing them profitably and taking names over here and ready to reload. We have a live trading room. We broadcast 5 days a week. We're now our new addition is none other than Garrett. And that's actually one of the reasons he's on here today. Of course, just kind of give him a little bit more of a formal introduction. We're broadcasting now, though, for over 7 hours a day. Now, not everybody has to tune into every minute, but if you like Garrett, tune into Garrett. If you like me, tune into me. It's completely up to you. And if you can't tune in live, you can always listen to the archives. You don't have to tune in. You can just get the 3 trades a week. That's part of it. Okay. There's over 100 master classes. There's 10 years of archives here. 10 years of archives. All right. Hundreds of custom studies. We have tons of stuff. If you guys are into studies, we share codes. Garrett, you actually use a couple of different, they use TradingView,
Yes.
which, you have Pine on there. You share some codes in Pine as well, which is awesome. We have coaching sessions, which is just continuing education. And of course, pro level trade alerts, which we're constantly providing out there. So you can unlock literally everything. If you guys, if you go to theotrade.com/TP, theotrade.com/TP, okay, scroll down to the bottom of the page over here, okay, and you can literally enroll for everything. It's total Theo Unlimited at 997 on here. To kind of continue on a little bit. All right. So this is the masterclass. The masterclass is obviously this Friday. That masterclass, as I was saying a moment ago, is a lot of high probability strategies, but it's just surrounding like what I actually built the whole entire class to be is giving everybody that's tuned in a better feel, okay, for what it is to trade in volatility. This is where I was born. This is where I live. Like it's what I do. Like I am a volatility trader. Like, by the way, Garrett, I started trading 3 weeks out of college, okay, in 1998. And I was, I don't know, less than a month in, and we hit long-term capital management.
Mm.
So when I say I was born into
Yep.
volatility, holy crap, that was real, man. That was real. That was like, and the firm and the group that I worked with, we were dead smack in the middle of long-term capital management. Portfolio was offered to us, meaning that okay, individuals showed up and they said, "There's a firm, they're blowing up. Okay, they're called long-term capital management. Here's the books. You want to take it?" And gentleman that actually ran our firm, very, very astute trader, said, "No one can take this. This this is bigger than anything that anybody has ever done. If you guys do not fix this, okay, it's over." And they said, "What do you mean it's over?" And I was in there, man. And I was 22 years old, had no idea what the hell I was doing. I was in there. That it's over. That financial markets, okay, may not open if this is not resolved. And that was
Yep.
almost 10 days before the meeting happened
Yep.
with the Federal Reserve.
And
So
yeah, just everybody for reference, that is before there was Lehman Brothers, before there was Bear Stearns, before there was Silicon Valley Bank, before there was any of this, there was long-term capital management, which was a hedge fund that nearly sank everything in the late 1990s on the backside of the Asian financial crisis. Kind of like, kind of had that moment of, the 1906 panic where JP Morgan had to bail out the entire system. And then we ended up having the Federal Reserve as a result of that. LTCM is kind of why the Federal Reserve is the backstop for the global financial system today.
Yeah, it is kind of crazy to think about that. It's after Glass-Steagall Act was repealed, everything that you see now, everything you see is like they have to have a backstop.
Mm-hmm.
It's too big to fail. There's a backstop out there. And I was right in the middle of that. Well, obviously, I was right in the middle of the internet boom in 2000, like born in volatility. I love it. Like I don't, I don't really enjoy years like last year it was all right. Like I did all
Mm-hmm.
right, but I don't enjoy it nearly as much as like 2022. Like I was like 2022, these are my people, man. The
Right.
Bears, these are my people. Um, like 2018 was unbelievable. 2016, 2018. Um, Obviously the COVID crash, like if you name a crisis in recent history, okay, I am right in the middle of it. And
Mm-hmm.
I love it. I've always been a crisis seeking trader. And I think that the best thing I tried to do when we were building Theo Trade is to find people that is like differentiated from my background as absolute possible. Like I didn't want anybody that was like another, quant that was an options geek.
Right.
So, I brought on a chart geek and then I brought on this geek. But with that, I actually am doing the class this Friday, and it's going
That's
to be about
awesome.
only about 2 hours. Okay, but I just want to give people a better understanding of volatility. Not even like you understand volatility better, you're going to survive this business much better. And like this business has got to be about longevity. It's always going to be about longevity. Everybody make money here, make money there. Okay, talk to me when you've been in it for 25, 27 years. Okay, you got to survive. You got to survive the rough times. And if there's an area I understand, it's volatility, and I'm going to try to give people some insights on that. By the way, it's a 90-day money back guarantee on the Total Theo Unlimited. But the bottom line is like, look, we want people that want to be here, plain and simple. Like, come here if you want everything kind of packed into one, price, $1,000 a year, 3 trades a week, 3 trades a week. This is something that I do most of the trades. I don't do all the trades. Actually, Gianni, Brandon, okay, a few others are actually helping on me on some of the trades, but I actually I like it. And the reason I like it so much, like the 3 trades a week, first of all, nothing, Garrett, keeps you more honest in your trades than knowing that you just shot a trade to 6,000 people at the
Mm-hmm.
exact same time. Nothing keeps you more honest. And when I say honest, I mean
Yep.
like there's a certain like an in-out spreads. I use rules in these in-out spread, like the trades I was showing you like a little while ago. One strike in the money, one strike out of the money. If I so much as deviate from criteria of that master class, okay, by even like the slightest amount, okay, I will literally get 400 emails. Like, and if there's anything that keeps you in the straight and narrow, it's trying to avoid getting 400 emails because I did something that was a little like, off the cuff.
Right.
Today, I can already tell you the TLT trade I did was a little outside the usual suspects of what I do. And I know like the emails like, why did you do this? Why did you do that? Don't worry. You tune into Theo tomorrow morning. I'm going to explain it all. Serious. I'm going to explain the TLT trade in depth tomorrow morning. Probably carry that a little bit into Friday morning too. So anyway, 3 trades a week. This week, getting a lot more. By the way, the markets, as I said, they may not even hold up today. Okay. Live trading room. The live trading room, it's awesome. I mean, I don't know what else to say because like we have you in there now for like
Mm-hmm.
45 minutes, and then I'm on for an hour, and then Jeff Bierman's on for an hour, and then Gianni's on, and then Brandon's on, and then Blake's on, and then Tony Rago's on for an hour, and then Corey Rosenblum wraps up the day. Like people don't understand. Like you want to tune in. You don't tune into this crap like CNBC. If you're going to have something on in the background, okay, that wants to give you trade ideas, here it is. But we incorporate it. Okay. So not only do you get like 3 trades a week, but they're getting blasted out. And some people just will not, some people just won't tune in every day, which is fine.
Right.
I kind of like when they do. Okay. I
Yep.
like the community. Like I'm into it, so I really do. And I think that if you're going to sit and you're going to trade, okay, that you need to be around like-minded people.
Mhm.
So yeah,
And
it
and
is
we'll
what
and
it
we'll
is.
watch CNBC so that they don't have to. Like, it was 2-3 days ago they came out and they said, well, Goldman Sachs is now saying that oil is going to sell off. And what did we turn around and do? We told them we've seen this 1,000 times. Every time Goldman says one thing, oil goes the other way. What's the XLE doing right now? It's running, and we're running it up. And you just had that trade with XOM to prove it.
Yeah, actually, the XOM one worked out. Okay, I am as one of my predecessors said, I'm never wrong. I'm just early. Just early. You know that was a Tom Sosnoff thing,
Yes,
right?
I do. Yes,
Okay,
I
I'm
do.
never
All right,
wrong. I'm just early.
it's 320. You hit that top
Yeah,
band on the standard deviation, and we're seeing some sell-ins. So,
yeah.
kind of as expected, that pow pop
No,
and drop that we talked about.
it's funny because I was talking about like, oh, volatility and so forth. People
Yeah,
are like, oh, it's just going to rally right back up. Yeah,
right.
you already bought into it. You already bought into the
That's
idea
right.
this thing's going to rally back up. It's not going to rally back up. You will have some wild,
Hmm.
unruly sell side activity. In fact, don't take my word for it. Look at the volatility futures. Volatility futures already bid back.
Hmm.
So we are. I'm not saying that we're going to close like down or anything like that. You are seeing the beginnings of destabilization. This is
Hmm.
people that saw the sell side activity over the last couple of days, and now they're like, running for the hills. They're going to run
Yep.
for the hills. By the way, I will show you this Friday, okay, how this instrument really works, why it works. Stop looking at the stupid VIX. I hate it. Hate it. Okay. I mean, I grew up, talking about the VIX, but it's obsolete now. This
Yep.
was my predecessor's volatility indicator. And sometimes it's like a knee-jerk reaction because, like again, I grew up in trading. So, oh, VIX this, VIX that, VIX this. You got to change yourself. You got to
Hmm.
reinvent yourself. And like talking about the VIX is it ages you. It ages you. Anyway, the trading room. Never trade alone. Okay.
Hmm.
252 trading days in a year. Okay. That's actually going to be 7 hours a day now. And we're in our 10th year. And every single spoken word on Theo Trade since the day we started 2016, we kicked off the first trading day of 2016. Every single word is archived. It's awesome. Okay. I absolutely love that. I mean, we have several petabytes of data that are now archived, which is, if you don't know what a petabyte is, look it up. Freaking huge, man. It's freaking huge. Okay. So meet the total Theo team. So the trade team here is unlike any other. By the way, I love to you've now joined the
Ooh.
island of misfit mascot. I think that was a reference. Was that was South Park? That
Yes.
was actually a South Park reference.
Yes.
The island of misfit mascots. Um, Look, if you're in this business as long as we've been in it, okay, you realize after a while you are few fries short of a happy meal. So join the club. Okay. I mean, we have some fairly, high intelligence levels, but everybody, it's you're sitting in front of screens all day. Okay. True story here, Garrett, and I don't think you've ever heard this, but I left TD Ameritrade in 2015.
Mm.
I actually announced that I was going to leave TD Ameritrade in 2014. It was actually in October of 2014, and the day I announced was it was like October 7th or 8th. Why that day? Because my last child was born
Mm.
October 5th of 2015. Their insurance was so good. It was sorry, October. He was born October 5th, 2014. That was the Zach, and their insurance was so good. Like, man, I was like hooked. But I had a 5 year lockup clause, and my lockup clause had ended basically January 1st, 2015. My lockup clause was done, so I announced, my exit, and it was good. So the rule of me exiting was okay, but after you exit, you have to sit at home, and you're not allowed to do anything. Okay, for couple of months. I would literally sit, okay, after 15 years of running education and division of the company, I would literally sit there, okay, just like I am now in front
Right.
of a bunch of screens, yelling and screaming at the screens. And my wife, she's like, oh, she's just like, first of all, you're gonna have to get a job. Okay. I don't want a job. I just got done with a job. I don't need to work. I don't want to work. She
Right.
goes, no, 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 no. She goes, if you want to stay married, you're going to have to get a job. You're going to have to do something. And she goes, and then as she's walking out of the room with like, this possibly with her middle finger up, because I was driving her completely nuts. She goes, by the way, people might want to actually hear the stupidity, okay, of what you're yelling in. You should put a microphone in front of you.
Yep.
And I was like, that's actually a pretty good idea. That is a good idea. That idea turned into Theo trade. No joke, because I literally I'll sit here even when I'm like not live with the thing on, I'll still talk.
Mhm.
Okay. Somebody somewhere is listening. They are. Had people in working in my office the other day, and I was still talking. They're like, "You talking to us?" And I'm like, "No, talking to this piece of crap market." Anyway, yeah, the market listens, people. The market listens. So again, welcome to the island of misfit mascots.
Thank you.
This is Garrett in here. Obviously, we've got Blake. So Blake actually worked with me all the way back like early Thinkorswim time. Blake is actually really good currencies, really good currencies, global. Okay, then we actually get into a Tony Rago. Tony is just our Nasdaq futures trader. We come into Corey Rosenblum. Corey Rosenblum is a swing trader and really kind of cool. Like I don't stress Corey enough. He's such a low key individual that, his trend day tactics though are second to none in this industry. I actually met Corey at a trade show also over 20 years ago. So like I've known him, Brandon. I knew Brandon going all the way back to like early days, 2007, Thinkorswim TD Ameritrade. He actually worked there. Brandon is awesome in global macro. Then we actually come into Gianni. Gianni looks 12 years old. Okay, he is our other new member here at Theo. Gianni is actually a great pickup too. So I knew him through a connection of guys in Detroit. By the way, as I said, every single trader knows every single trader. So he
Mhm.
actually worked with a group that I've worked with years ago out of Detroit. So he was an easy find too. Awesome. By the way, everybody loves like Gianni. So this is our he's the youngest in the crew. It's the Italian stallion. He's still in his 30s, man. There's life left in him. Okay. We're gonna bleed it out of him for sure in the next couple of years, but there's life left in him. Hopefully he's listening to that too. Um, and then of course Jeff Bierman. Jeff Bierman, what do you say about Jeff Bierman? I've worked with him since early days. Jeff actually, and Garrett, you may not know this, he built most of the studies for the
Mhm.
Thinkorswim charts. Over half the studies in the charts came from like the methodology of how we actually build them came from him. So charts reported through my division. So this is ironic. I'm a quant and I'm an options geek, but charts and scanning all reported through me at
Mm.
the last like 7 years I was there. And I don't know why I got like the distinction. I had Jeff Bierman though in my group, and people were shocked actually when I brought Jeff on because we used to get into it all the time. But me get into it with like a
Yeah.
market technician, never. Um, I love Jeff though, absolutely love him. Right up to the point I wanted to kill him, but other than that, by the way, you say that on live air now. I can't off him now. Everybody would look at me first. Jeff, though, is also a professor of
Mhm.
finance at DePaul, which here, you want another really quick story that you'll absolutely love?
Let's do it.
Okay. All right. So you were talking about Schiller earlier.
Mhm.
So I was doing a class at the University of Chicago.
Mhm.
So I'm sure you're familiar with the Gleacher Center, right?
Absolutely.
So I was teaching a class to graduate students with Tom Sosnoff. We were
Okay.
invited, just the two of us, and we were running late because these graduate students, and it was packed, man. That room fit 100 and like 20 people, and there was an extra 30, 40 people in the room. Anyway, we were way over in time, and questions are flying in. It was awesome. And there's this professor that keeps coming in. He's like, "Come on, I got a class in here." Okay. And I'm like, you sit there and know your place. I said something that was hysterical. People were like dying laughing. And then somebody throws up their hand. He goes, "You know who you just basically yelled at?" I go, "No." They go, "That's Schiller." And I'm like, it was.
That's
I
fantastic.
yeah, I yelled
Well,
at yeah,
you
yeah.
got the slide up. You got comprehensive Netflix for traders. You know, everybody, though, that the reason that this is, it's Netflix for traders, but Reed Hastings doesn't tell you the best movies to watch, right? So you got Don here, you got the founders here walking you through trades, walking you through technical analysis, doing all the teaching. So I like that comparison, but I also just want to point out that you do not have the access that that the people at Netflix would be love to be able to talk to Reed Hastings, but No,
By the way,
you
name
can
a
talk directly to
genre,
Don right here.
name a genre of trade, and we have an archive for it.
There you go.
I know it's $1,000 for the year, but if I show you one of them, and you'll love this too, Garrett. And by the way, I'm speaking to Garrett here. You'll love this class. Um, Check this out, Slim Miller. It's 5 essential building blocks to successful trading. I was talking earlier, like how I kind of grew up around traders. I met Steve Miller when I
Mm,
was like 8 years old because he was actually buddies with my family all the way back into the 1970s.
wow.
So yeah, and Steve Miller, Slim actually worked with us here at TheoTrade until he officially retired. So still does some stuff like on the side, but he's totally retired, and still involved in markets though. Still talk to him, but he put together a couple classes. But man, is that'll change like your life in trading. Dead serious. If you're in this business, you don't watch this class, okay, it's by far and away, one of the greatest classes in the archive because I'm not much into like psychology of trading.
Mhm.
Okay. And it's not like, like geek psychology, like, oh, breathing exercise, nothing crap like that. This thing gets you inside your head. Okay.
Absolutely.
And it really, really helps. It's one of the best classes like I've ever watched. And again, that's coming from like, most of the classes in here, like a lot of them are from me. And you have access to every one of them. Earnings flips class, flyby, income accelerator, back spreads, a volatility crash course, you name it, we've got a class on it. These are all classes that we've put together since 2016. And obviously, we're going to add to that. As I said, it's kind of the Netflix for traders over there. Okay. So the master class, this is just a couple of them that are actually out there. Okay. Part two, it just keeps going and going. Like we just have class after class, and you get access. It is the most comprehensive archive in the entire industry. One area I always forget to talk about is like some of the technical analysis. Okay. People like Jeff Bierman have forgotten about, more about technical analysis than most of us will ever
Hmm.
know. It's great. So,
I wouldn't have gone to all these master's programs if I could have just gotten this instead.
yeah, I talk to Jeff about this all the time. I'm like, what you teach at like DePaul versus like
Hmm.
what you're doing at TheoTrade. He goes, oh, TheoTrade's way more comprehensive. He's like, at
Hmm.
DePaul, he's like, we have to follow these ridiculous curriculums. He's like, students
Hmm.
don't learn anything. He's like, they just get fed, textbook information.
Sure.
He's like, but he's like, it's not functional. We have these conversations, by the way, literally all the time. I have them with Jeff. I was like, because I have kids that are in school, and I'm like, they don't learn anything. They just get
Right.
spoon fed, and it's memorization. It drives me crazy. He says the exact same thing now at college.
Yeah. You got to
Yeah,
learn. You got to learn by doing, and this is one of those environments where you can do that every single day. If we're doing this 7 hours a day, I mean, there's going to be something to do at any given moment in this market. Up, down, up, down, up market, down market doesn't matter, right? You're trading, you're being active, and I mean, gosh, 100 plus studies, 100 plus scans. We're in here all day, and look, I mean, we walked you through this one just simple strategy today, this little pop and drop, and now, now you're saying there's 100 plus.
yeah. By the way, I'm looking at some of the price action. A few of the things I'm in right now. We also give you all the custom scans we use. So indicator scans, we got it. It's available to you. Obviously, daily and weekly coaching sessions. Okay, trade ideas. Constantly sending out different trade ideas. So wait, we have the 3 trades a week, but I also just trade in the chat room sometimes, like while I'm live, in and out, in and out. So will do intraday setups as well. And that's critically important over here. And again, as we said, it's the most comprehensive trading education, the most complete package that you can get anywhere in this industry, bar none. And we kind of, when I say we put our money where our mouth is, like that's why there's a 90-day money back guarantee in there. And I don't, I don't often like, sit here and, proposition 90-day money back guarantee just in case. Look, we put that there because sometimes life gets in the way. We want to make sure that everybody's comfortable with whatever that you're in. But we want people, okay, that want to be here. As I was saying, if you need us, call us 623-244-5657. We can post that into the chat room. Um, onward and upward over here, theotrade.com/GT. As I was saying, the 90-day money back guarantee. There's no stipulations. That's the only thing I threw up there. There's no stipulations to the money back guarantee. People, it's only $1,000. If you, as I said, we want people that want to be here. And in terms of, Total Theo Unlimited. As I said, it's the most comprehensive package that you're going to find anywhere in this industry, bar none. So no excuses, no questions, no commentary needed. Email us if you need your money back. Totally comfortable. We do 100 spots on a Total Theo riskless deal. And we've never actually done Total Theo Unlimited and offered a 90-day money back guarantee. We've actually never done that. And we're doing that because, again, we want people that want to just, we want everybody comfortable. You made a decision. You got 90 days to decide. Okay. But you're going to find out really quick as going through the archives and so forth that there's just nothing quite like this. The trades that we're going to give you, look, I hope that every trade goes well. I mean, you should see some of the trades we've done lately. In fact, I wasn't planning to pull this up, but I'm going to do it. Let's do it live. Okay, let's just do this live over here. So I'm actually going to throw a spreadsheet literally in here, and you can see all the closed trades. Once in a while, I'll have one expire on me. I don't mind. Okay, all the closed trades over here. Okay, that are recent and profitable. So we're killing it. This is just, by the way, this what I'm showing you right now is just the in-out spreads. This one's just the in-out spread. This is not everything we do, but I have a special trade tracker expressly for like in-out spreads. The only open position I'm left with right now is Goldman Sachs. Although if I have some time, I might actually send out that GLD trade. I didn't even send that one out yet. Okay. By the way, I appreciate that UK Ray. Theo Trade is the greatest traders learning tool. Okay. I'm just reading this in chat right now. You guys are kind of curious. Okay. UK Ray. I was with Don K since the beginning. No other service comes close. I appreciate that, Ray. Figured I'd throw that up there really quick. Again, onward and upward from where over here. I also want to remind everybody there's a class this Friday. It's 10 a.m. 10 a.m. this Friday. It's 10 a.m. Eastern time. Yeah, it's 7 a.m. Pacific time. Get up. Okay. I'm helping you. I'm helping you. I'm up every day, by the way. Like, if you haven't noticed, I'm all nuts. I'm probably up at like 4:50. By the way, that seems easy enough, Garrett. But when your kids start getting older and they're staying up like much later than you, you're like, go to bed already. I'm like, go to bed already. Pacific time, people. Look, a couple of questions answered in here, and then we are actually going to turn this over because we're running out of time over here. We have everything you're going to need: laptop, internet connection. You don't even need that. You just need a mobile device. You're fine. This is a yearly membership. Okay, this is a yearly membership, so you don't pay $1,000 a month. Okay, or you don't have to like buy a trading room and then buy the 3 trades a week. Okay, it's comprehensive, and that's what's important. It's comprehensive, where it covers that. We give you the 3 trades a week. I do a video update on that. Okay, every Friday I do a video update. We actually give you access to Theo Trade Mobile, which is on your mobile device. Add your cell phone number. When you're actually enrolling for it, it's theotrade.com/TT. Add your cell phone number. Give us a viable cell phone number because we do push text, email notifications. So add your cell number in there. If you ever need us, okay, email us. Support@theotrade.com. We use a common inbox. Variations of the trades. Like if you're looking at any of the trades that I've done, okay, today, and every trade that I actually showed you in there, you can do it inside of an IRA. So there's no difficulty in there whatsoever. We can also help you get approved for options trading at a bunch of different broker dealers out there. So that is par for the course. Remember, again, there's 100 riskless trade spots available. We do that obviously to incentivize people to enroll today. But you want an incentive? Okay. Well, look, today's Wednesday. This Friday is the class. So you got between now and then, but we're only opening up 100 riskless trade spots. That means 100 of the 90-day money back guarantee. So get results, take action, enroll for Theo Trade now. Garrett, I'm way over in time. I want to thank you for joining me for the last hour and a half on here.
Yeah. Thank you for having me. Awesome platform, great company that you built. Really happy to be here, Don. Thank you so much for your time today.
Yeah, thanks everybody. And again, if you need us, we'll be in the chat room right now answering a couple of questions. And the main chat room, I'm going to turn it over to Corey Rosenblum for the close. Thanks everybody for tuning in. Have a wonderful afternoon. Bye-bye.